Hello, welcome back to Global Weltrade Synthetic Signal Provider Service. If this is your first time of visiting this YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to like, comment, and refer this channel to your network so that YouTube will push us to very high level of audience. Okay, we are about to enter the Xmas and the new year, which is 2026. Never you enter 2026 poor. Now the word of the day is I will never enter 2026 poor. You have to make this money. Wake up your out, like rise, stand up, gym up, motivate yourself to make money with the right wisdom, right knowledge, right information in real time. And what it is make a first step, gear in that small input so that you will start having excessive output. Let that input be within the right environment. And what it is make sure you take advantage of our made for you services. Subscribe to our VIP signal channels, enroll for our mentorship and courses, and try to actually invest with us. We run different levels of account management, and this is the right time to shine. Don't go poor. You deserve a better life. Don't enter 2026 poor. You deserve a life worthy of emulation. Okay, people should not look down on you. 2026, you have to celebrate this Xmas. You have to celebrate this 2025 Christmas with excessive euphoria, excessive blessing of financial freedom. Okay, so that's, by the way, the topic we shall be discussing is kindness holds in Forex synthetic market. Okay, this concept, this principle, or let's call it a kind of theory, but this theory is closer to a law. So I'll be using the word law. Like we can term it kindness holds law. Okay, so in forex synthetic market, when you use the word law, is more stronger than theory, because a theory can be doubted at certain level. A theory is not really a fact, so that's why I make it a law, so it become a fact, because this is a fact. Okay, so this law was coined and formulated and then published by an African philosopher and a scientist and mathematician in the year 1992. Okay, I don't want to go deep into the history and why the law, like the sources of the law, like the circumstances that bring about the law. But what I'm gonna do here is actually to explain the law and tell you how this will help you gain a kind of sources, like have some level of sources as a trader. Okay, when markets move, it actually move in two major parts. It takes two major parts. If it is going up, it takes the upward parts. If it is going up, so there are two major parts: the impulse part and the retracement part or pullback part. So the impulse has the highest length. It has a higher length than the retracement. So we can say that the impulse function I is K times the retracement function R. They are a function of time and space. Okay, so we can say that this K is a constant. So K is K is greater than or equal to 1. Yes, K can be equal to 1 or greater than 1, but K can never be less than 1 in a highly directional market. That is, the market is not ranging. So this actually apply for non-ranging market. That means it apply for trending market only. Okay, so the K is constant called trend factor. Okay, the trending factor is, it shows the ratio between the impulse action, the magnitude of the impulse vector, and to that of retracement vector. Okay, so it is equal or greater than 1. Okay, that's by the way. So when the market is trying to buy, we are talking about buy action. When the market is trying to buy, it go up with bigger length, which is impulse, and start pulling back. Nobody can be able to say the exact time the pullback will end, but it must happen. Then when it pull back, when the cycle completes, it starts changing direction to the upside. It will tap to the previous high range and decide whether to reverse or create another impulse. Okay, but things doesn't actually happen the way we have explained it here. That is a idealistic action, the idealistic event that happened. That's what I have shown here. But in practice, in real life, it's not always like this. Like, it may be 10 to 20% idealistic. Like 10-20% of time it can be like this, but 80% of the time it will never be like this. That is where NIELS law comes in to solve this problem. Okay, to solve this problem, this pullback problem. So if your market wanna sell, you have to believe this stuff is going to pull down with a bigger length and then start pulling back. We don't know when the pullback will end. That is the one thing. But we know that no matter how it pulls back, it will continue coming down. Okay, that is create a new impulse. When it terminates to this low, it will range. It can not, there is no guarantee, but like it's not a compulsory. There is no compulsion for it to range, but markets have to range after certain momentum driven move. Like after certain impulsive move, it have to range a bit and then make decision either to reverse or break out of the range in the direction of the impulse. Okay, in the impulse direction, which is downwards. Okay, the impulse is always downwards for a selling market and always upward for a buying market. Okay, so the pullbacks or retracement are in opposite direction to the impulse. Okay, to the impulse action. So if market break out of a turning point, high or low, it always pushes back to it after the impulse dies out, after the impulse part end. Because what I'm gonna show you here is that this market goes pull back or retraces up and starts coming down. Okay, when it is coming down, it is also having tiny retracement. So when this pattern, look at what I'm trying to explain here. When market is trying to sell, it will pull down first in big length and pull back. So if it is pulling back, it is making these cycles. It is retracing internally and also pulling back. Okay, so if it change character and start doing something like this, that means the new impulse have started. Most time you can draw a trend line and see the breakout. So here becomes a hold. Okay, but I've not gone deep to discuss about hold, but here becomes a hold. Like it is a hold now because the price candlestick are not acting in such region again, and the market come here, range a bit, or maybe break straight, but it can range a bit, reverse, or break to continue to create a new impulse, because an impulse must break a turning point, which is a high or a low. In this case, it's a low. Okay, so when you do this, it will pull back. But the problem now is where the NIELS hose comes in is that when it's pulling back, everybody is waiting for you to come back to this level, to this breakout line. But in most cases, it will never come back there. It will just reach certain lengths, which is very far, most definitely far from here, and then continue going down. And this is very painful, and it has made a lot of traders to miss opportunity. And this is what I'm discussing in this video. Okay, so let's bring a buy scenario again and see what I mean. So this is the price axis, and this is the time axis, and this is the origin. Okay, now I'll be using line charts to explain this. I will use candlestick to explain this. Okay, so let's change. Okay, a shaded candle represents a bullish candle, a bearish candle. Why unshaded candle represents a bearish candle? Okay, so let's assume a buy event, a uptrending market. So we'll have this candle. This is a bearish candle, so I shaded it, and then we'll have this. We have a breakout candle like this. I didn't shade it. This is a bullish candle, and then we'll have another upward candle like this. I didn't shade it. And maybe remember that since here is bearish candle, here there is a breakout here. Okay, now let's assume we have a tiny black candle here. Let's shade it. This is like a shaded candle. I'm sorry, a shaded candle, which is a bearish candle, and the market breakout because it's buying market. Okay, now let's assume there is a deep pullback, and so the market start pulling back, and everybody is waiting for it to pull back to any of these lines or any of these breakout line. Okay, let's remove this. Okay, people are waiting for you to pull back to this line. Definitely yes, because this is the nearest breakout line. So but suddenly it reaches here and do what? Impulse to here, and this is a massive peak. Gold normally do like that. Flip index in the Weltrade market normally do like that. Actually, I'm doing this video on the Weltrade market with a Weltrade broker. I'm going to go for practicals using the Weltrade platform. Okay, so check down the description of this video and make sure you register with the Weltrade broker. Okay, because if you brag about it and register on the Google without using the link, you're gonna make clone site. Like you're gonna register with clone site, you're gonna meet clone site, and you are going to deposit to fake broker. There are fake brokers out there. That's why you need an ambassador who is legitimate to work with. Okay, and that is we. Okay, Global Weltrade Synthetic Signal Provider Service is ready to help you get to your financial freedom. Start and stop quitting. Okay, now we are going to practical. I've explained this. So what I'm teaching is your ability to catch the move after when the pullback is ongoing. Your ability to know when the next impulse will start using the NIELS hose law. NIELS hose law actually general is solve the problem of pullbacks and missing of opportunity because of uncertainty, because of uncertainty characteristics of pullbacks. Okay, right here we are going to practical to deal with these issues. Okay, right here this is CHII. Okay, this is CHII. Okay, we're going to be on the 4 hours time frame. Yes, we are going to be on the 4 hour time frame. I'm not doing top down analysis. I'm just trying to tell you how to deal with pullbacks. Okay, I'm trying to teach you how to deal with pullbacks. Okay, let me check something. I'll get back here. Now, currently, let's study what gold did. Every action in the market matters, so let's be on the daily time frame so that we get the big figure, but we might also be using the 4 hour to make things easier to understand. Okay, so right here we have a break of structure here. Okay, some people will actually neglect this break of structure, but if you a good analyst, market analyst, you're supposed to know that this double top is a sign of reversal. So the market was trending upwards and it fails to trend again and creates double top. Then we have a bearish engulfing this is a bearish engulfing candle, because this candle engulf this small bullish candle, so it's bearish engulfing candle. So within the length of this bearish candle, there will be some pullbacks, so it's a impulsive move. So if we pull out fib levels, you will know where the retracement will end, because when you are studying retracement, you definitely need fib levels. Okay, actually fib levels is actually supporting the CHII NIELS hole. Okay, so the market you see, we start from where the movement started. It started from there, and then we push down to where the pullback, the market lose energy, and the pullback start to happen. So you see, it pushed between 50.0 and 38.2. Okay, so between 50.0 and 38.2 might have around, let's say, 50 to 60% probability for a signal, but the golden level, which is 61.8, could be more accurate. Okay, but that is the first sign that a sell will start. The fact that it is lying between 50 and 38 is a sign, but not not a valid conclusion. You need further methods to do this, which is CHII NIELS law application. You are going to deploy this law. Now, what am I going to do? I have to first of all study other time frame and check where there are probabilities of sales, because you have to run probability distribution analysis PDF, probability distribution function analysis PDF, so that you'll be able to know where there are probabilities of signals occurring in this market, so that you will not be able to wait for a particular breakout line and then the market run away from you and you miss the big opportunity. Okay, so you see, this is our breakout line, but the market never touched this breakout line. That's what I'm trying to teach here. But it's still sold. It sold by how many pips? This was around, already sold by over 2,800 pips. That's crazy. Okay, over 2,800 pips. You're trading one lot size on this sell. You are making over almost close to $30,000, just one lot size on this 2,800 pips. Okay, that's the power of understanding the CHII NIELS law. Okay, now what am I going to do? I will step down to 4 hour time frame. When I step down to 4 hour time frame, I will run what I call path analysis. Now, and then I will deploy limit theory, proximity theory, and left right rule. Okay, that the market have to respect the nearest key level before going to the next key level first, and it obeys this rule faster in the direction of the trend, meaning that if a market is trading in a given direction, it actually go to the nearest key level and respect that key level and continue that trend. Every other key level become a hole, become empty, and then you see heavy pressure within those holes, making the market to push harder in the main trend in the main direction of the market. Okay, now what am I trying to say? This breakout candle, this candlestick that breakout is already a what? Is already a fair value gap. So that candle being a fair value gap, how do I determine the fair value price? I'll first of all take the high of that candle. I will take the open price, not the high and the low, but the open price and the close price. So this is the close price and the top is the open price. I will try to localize the midpoint, because midpoint has been a theory in mathematics, and the reason why most things happen around 50%. Okay, they don't actually go far away from 50%. They are very close to 50% or to 61.8%. If you study half-life and other things that has to do with halving effects, they are very important. You have heard about half wave and quarter wave, but half wave have more power than the quarter wave. And then wave propagation, you hear about the relationship, like let me get to this. I'm gonna explain this. Okay, we need to bring this to life. So right now we have this liquid theory in telecom. Remember, why do I always bring you see, if there is no internet, no computer, there is no way the exchange rate can be updated, and it will be very hard to, the exchange rate will narrow down to, will be localized within certain countries. So there will be a lot of discrepancies in the rates, because there is no global server to update the prices, and for subcomputers or personal computers to actually see the update. Okay, but the life changes because of presence of computer and internet. Life changes, so we have to adapt. Okay, so when I teach things in the forex synthetic market in analogous to certain scientific stuff, then especially internet, wave, computer, then or some little of physics, it means that these things have adapted to align, because life is all about adaptation. They have adapted to life. There is a lot of analogies in life, and they have to, for you to understand something, you need to use something to explain it, right? So what I'm trying to say here is this Nyquist theory, which shows that maximum symbol rate for noiseless channel. The Nyquist theory establishes the theoretical maximum symbol rate. Okay, I don't care about the meaning of symbol rate. Okay, but understand this: it provides theoretical way of getting the maximum symbol rate for noiseless channel. Right now, it states that for a channel with a bandwidth of B, bandwidth is like frequency, the highest symbol rate 2B can be achieved, meaning that bandwidth B is half of the highest symbol rate. So I'm trying to show you the power of 50%, and another way to represent half is 50%, right? So that's the very fact. With midpoint theory, we are seeing that we shouldn't have missed this opportunity, right? So when we localize this midpoint, we know that this is the midpoint of this. The easiest way to calculate the midpoint is to draw a rectangular slab and then map the midpoint of that rectangular slab. When you have done this, you remove the rectangle. Okay, you remove the rectangle. Now when I have removed the rectangle, you observe how price interact both inside the overall fair value gap and the midpoint of that fair value, and the midpoint of that fair value gap, because I have used this open and closing of this candle as my fair value gap. Right now, the next thing you need to understand is there any previous impact resistance? Like, because we are looking for sell, right? So we are looking for the nearest closest key level, which is in form of resistance, right? Because we are looking for sell. So there is one here, there is this resistance here, price reach there and drop, right? So we extend it. Now, is there any other nearest resistance to this one? After this one, is there any other closest resistance? Yes, there is another one. You know why I'm looking for binary resistances is for risk management, especially when the account is big, right? For bigger accounts, because if it is small account, then you are going to make sure that your SL is small, and that is by optimization, SL optimization, and that will involve a lot of stuff, and it's very risky unless you're an expert. But we have done all these things for you in the VIP, like sniper entry, sniper signal. That's what we do, right? So so right now, when price came here, it came back to tap into the resistance. How many times? One, and then two. That is 2 touches plus the first one that created the resistance. That is 3 touches, right? So this shows that the market loses energy once the market loses energy to the upside whenever it enters into this session, into this resistance zone. That is where belief system have to help you. Trading is more of metaphysical stuff, mind. You have to be strong in your mental strength, right? So here, it can never break here, and without belief, you start selling from here. Okay? If you now go to line chart, you will not see NIELS hole. You see, it making here to be a hole, because by right, some amateur traders will be waiting for price to come and grab liquidity inside these holes, but they can't, because that is the law must hold. Okay, right now the market creates another breakout line. After some time, it's going to pull back, but who knows where it will reach? Because some are even placing orders which will never be activated. But if in real time, if we want to get a good trade, we have to take note of this minor resistance here. There is a resistance here. Price pulled back a bit in the 4-hour and drop. So the market will tap, and it will tap into this resistance. Not a guarantee, but it can tap there. Because everything I teach here is not guaranteed. That's not professional in what I teach, but we already have the skill. So that's why what we teach doesn't actually mean if you follow it, you will be successful 100%. But if you really add one skill to it, like if you learn it and try to know about your skill, your own ability, then you can see the truth behind what we teach here, right? So when I draw this trend line, this market, I don't know how far they sell, because the sell is still selling. Because if you go to 30 minutes time frame, you see that the market is still selling, breaking structures, going downwards, right? So it have not changed that character. So, but when it will return to, when it will pull back, the probabilistic, like based on probability distribution, here there is probability of sell here, or there will be probability of sell here, or there will be probability of sell here. So depending on where the sell starts, there will be a hole. But you can decide at this junction, I'm going to bring in, okay, before I'll bring in the law, because I have not stated the law, I'm just giving you illustration of what the law can do. Now let's try to see, that was like previously gold I've been buying. Okay, now how do we take advantage of this NIELS law? You know, NIELS law, I'm sorry, gold break out of this strong level, which is a resistance. Okay, the market actually distributed there. Okay, I'm sorry, accumulated. It's not because it created a buy signal, right? So it's accumulation. So it accumulated there, ranges get strong resistance and break out of it. Now you see some amateur traders, some idiom, like some, I don't know how I will put it, I don't want to insult any trader, but some trader who is not educated based on kindness law, we are waiting for price to tap maybe into this other block. They're waiting for price to tap into this other block here. There is a tiny other block there in the daily time frame. They're waiting for price to tap it. But those that are serious traders will step down to 4 hour when they represented, like when they have represented that daily order block, they tap into the 4 hour and run the PDF analysis. That is where where there are probabilities of sell, and they follow other ideas which are the proximity law, limit law, and then right hand rules. Now you see that here there is a change of hand here. Buyers overtook sellers. There is absorption of supply. The supply couldn't go. The demand absorbs supply, and a new buy action starts. Okay, so as the price movement evolves, you see that they keep creating. What you should be looking for is nearest support to the main support. So the main key level that we're expecting price to tap is here, but the probability for price to tap here is very, very unrealistic. Like there's no way to calculate it. It rarely exists, right? Meaning that it will happen somewhere else, but not necessarily here. So that place it will happen is what we are trying to localize, and so you see that there is a support here because sellers push price down and then buyers overtook. You have to be treating this like football. So sellers play, bring price there, buyers took over, break a new high. This break of high in the 4 hour time frame is the sign of buy strength. It's like if Messi is playing, like let's say if Messi carry ball to 18, it's a sign that there will be a goal. There's no way if Messi carry ball reach 18 and then you will be like the opponent team is going to overtake. The probability of opponent team overtaking the ball is lower than probability of Messi scoring within 18. Okay, so the sign of breakout, this breakout is a sign of buy strength. Okay, you have to follow this market like a football, right? It's a sign of buy strength. So you wait for price to tap into that support, not necessarily here, no, because price movement is very fast. If you simulate the price movement with certain simulators at certain nanoseconds, you will see that you will not be able to detect the tracker because the speed is going to be enormous. That's why you will miss a lot of opportunity, and when you enter at wrong price, the pullback will affect your psychology, hit your SL, and you lose, keep losing. You even miss the opportunity, you quit, you miss the opportunity entirely. You have to follow this smoothly. Okay, and you see how CHII, there is a lot of near CHII happening in this market. Oh, somebody is shouting me right here. I don't have time for this, please. Okay, there's a lot of CHII near. I used to forget this name. Near, you know, is a new law. That's why. So there's a lot of CHII near CHII happening in this market. You see, I'm sorry, CHII. You know, I have to be fast to make this thing real. So you see hosts. Between one buy and another buy, there is always a hold. Okay, between one buy and another buy, there is always a hold. That's what I'm trying to say. This hold, the broker take advantage of this hold to make you lose more money. It's all about control. Okay, I told you initially that the broker does not actually take advantage of your losses because they actually make money from the spread, and also the commission they charge traders, right? Yes. This is based on mass law. When there is infinite population, even smallest amount from individual population, like the smallest amount from each member of that population, is going to make the controller of that population rich. So that is the game. Okay. So right now I'm going to be ending this video Go and make more research about NIELS law. Read about NIELS, the contribution to the financial market, and then you'll be able to know what I'm saying here, right? I'll be ending this video. Thank you and bye for now.